I took a devastating $1,343 hit today, wiping out 25% of my account in a single session. I'm not going to sit here, act like a robot. I'm incredibly frustrated, I'm angry, and if I'm being completely transparent with you, the only reason I didn't revenge trade today is because the market wouldn't let me. All of my capital was completely tied up in those underwater tech positions. The human side of me wanted to pull up the charts immediately after the opening bell, override my sizing rules, force trades until I got every single dollar back. But because my buying power was locked up, I was forced to sit there, look at the damage, feel the weight of it, and the market forced a timeout on me. So I didn't lose this money because my strategy is broken. I lost it because I built a great set of trading rules and then I completely ignored them. So if you're tired of the fake trading gurus who hide their losses, pretend they don't have emotions, hit subscribe. Tonight, I'm stripping away the ego and I'm running a brutal post-mortem on my execution. Every trader watching this now is nodding their head because everyone has been exactly where I'm standing. The deepest pain of a loss like this isn't the money, it's really that psychological anger of knowing I had the rules written down to protect my capital, yet I chose to ignore them. So let's look at the chart to see exactly where I went wrong. For me, my thesis to the upside on Meta, Tesla, and Google are fine. But let's look where I executed. So I entered all three of these trades at a premium. And according to liquidity concepts, if you buy at premium, you're making a major mistake because you want to wait for, and this is where I got in really kind of at the peak on Wednesday. And you want to wait for price to drop down below an equilibrium into discount, and that's usually where institutional buyers are actually building their positions. But because I was impatient, I chased the green candles at the top of the range up here on Wednesday. I bought when price was overvalued. So that means I provided the exact buy side liquidity that institutions needed to sell into and reverse the market on me. And to compound that, if you look here, I'm going to actually drop down to the intraday on Meta. If you look here, this is Thursday. I really had an opportunity to cut these trades for a significantly smaller loss on Meta. Same thing with Tesla. I could have got out here on that candle, and then Google. Same thing. I could have got out here. I got one last opportunity either to get out with like a small profit or at a much smaller loss. So I held overvalued premium positions directly into the last day of the trading month, which was also a Friday. So you're mixing end of month, rebalancing with these with big money, with the kind of wacky volume on a Friday and the last Friday of the trading month. Options premiums get vaporized, and the market trapped me because I stayed when I should have ran. As much as this frustration burns, I'm genuinely grateful for this loss. In trading, the most dangerous thing that can happen is winning while breaking your rules. And if I had chased those trades in premium, broken my contract expiration guidelines, and the market happened to bail me out with a massive green day, my brain would have learned the wrong lesson. It would have told me, see, you don't need to follow the rules. You can buy whenever you want. And that just breeds bad habits that will eventually blow up a massive account down the road. So this $1,300 hit is a blessing in disguise. It stopped me in my tracks, killed the urge to gamble, and it gave me an immediate opportunity to look in the mirror, evaluate my discipline, and improve as the administrator of my capital. So I accept that fine and I welcome the lesson. And if you want proof that the system I'm using works when followed, just look at what actually survived from last week. I completely liquidated those tech positions from bleeding. Had to clear those out. They were very bad choices. But look at my leaps trades. My Snap January 2027 $4 leaps trade is really unfazed, still running green at over 36% in profit. My QS January 2028 $7 leaps trade, holding steady, up over 14%. So those are doing what they're supposed to do. I use those institutional liquidity levels, and I'm able to maintain some of that green in my portfolio. So I'll be walking into a brand new trading month with roughly $3,000 in liquid buying power, and I'm not trapped in those underwater trades anymore. So I have the liquidity I need to look for high probability setups moving forward. To ensure that that frustration that I get in the future doesn't return to revenge trading, I'm going to add some stronger rules to my daily strategy so I can strip away some of my own guesswork. So starting Monday morning, my execution is going to be restricted by 2 very clear rules. I will only trade the 9 a.m. hourly candle range, and I'm going to strictly limit my trading to a 2-hour window between 10 a.m. and 12 p.m. Eastern. So first, I will identify the high and low of the 8 a.m. hourly candle. Second, I will watch the 9 a.m. candle, and I'm waiting for it to sweep that 8 a.m. high or low to build up liquidity. And third, I'm going to be doing absolutely nothing until that hourly candle closes at 10 a.m. Eastern. The exact second the 10 a.m. candle opens, that's going to start my execution window. So I'm going to drop down to the 3-minute chart. That's what I use for entries, and I'll wait for displacement that prints a clean bullish fair value, or like bullish or bearish fair value gap, and hold structure. And then, only then, will I enter for a move back to the opposite side of the range. So if the clock hits 12 p.m. Eastern, a setup hasn't triggered perfectly, I'm going to be closing down my systems. Session is over. So I have my new baseline capital, and I'll be protecting it with absolute discipline. I'm owning my mistakes. I'm locking down my parameters, and I'll be honoring the strategy I built. The psychological battle is real, and I'm curious how you handle it. Drop a comment below. Let me know if you've ever had to fight off that intense urge to revenge trade and exactly how you got your discipline back. As for me, the rebuild starts tomorrow. Moving forward, every Monday and Wednesday post-market, I'll be sharing some iPhone screen recordings to track my live intraday execution and rule compliance in real time. So the baseline is set, the rules are ready, and there's nowhere left to hide. So remember, stay disciplined, protect your capital, and I'll see you in the charts Monday morning.